G'day ladies and gentlemen, and welcome back to another Bitcoin video. We have a few main topics we need to discuss today. First and foremost, we need to get into the Bitcoin price action and take a look at what's happened with that ascending channel breakdown and the fact that we've currently found support at the 21.6k price level. We then need to dive into some on-chain data, and finally we need to look at a video from a congressional hearing in the United States of America of a debate between Jerome Powell and Elizabeth Warren, which has raised the chances of a 50 basis point hike significantly over the last 24 to 48 hours. Okay, so without further ado, we'll start out here with the Bitcoin daily chart. What we have on Bitcoin, as you can see, is an ascending channel formation in the yellow. That one has broken to the downside. Of course, an ascending channel formation is a bearish structure. The entire time we've been in this structure since literally mid to late January, I have said it's very likely to break down from a structure, and the final nail in the coffin for Bitcoin was retesting the top of this broader range that we've been seeing since June, right, at 25.2k. Unfortunately, we were unable to break above that range, which is fine and healthy and normal considering it's the first retest of the range. We were unable to break it. We rejected. Since then, we've been in a pretty sharp downwards trend, and we've broken that channel to the downside. Now, what we do have on Bitcoin, what we do need to be aware of is the fact that we do have support here at 21.6k. If we zoom into the 4-hourly chart, we can see in this second red line, in fact, I'll make it pink so you guys can see it quite clearly, 21.6k has been acting as major support and resistance on Bitcoin since the middle of January. It acted as a rejection zone in the start of January. It acted as a bounce zone in the middle of February. And right now it's acting as a brief little support zone. Whether we hold this zone or not, obviously we'll rely on the short-term price action that comes to follow in the next few days. I would say it's likely that we break down from this zone. And the reason being is because yesterday I made the case that we could actually be seeing Bitcoin fake out and Bitcoin breaking back into the channel here because the total cryptocurrency market cap chart was still on support at that point on that yellow line. As of today, actually, as of the last 12 hours, the total cryptocurrency market cap chart has broken down from that yellow support line, and that means that there's no real supporting charts that will support Bitcoin, and to get a move back up into that channel. I don't know if that makes sense, but it makes sense to me. What I'll tell you is this, right? This is my overall opinion on Bitcoin right now. I'm short term. I think that Bitcoin will break down further. I don't think this 21.6k level will hold. Yes, we could see a few days of consolidation around this level. Yes, we could see a small bounce from this level, namely a bounce up to like 22.3k, top of this descending channel formation. Yes, that is what we need to be watching, this descending channel formation here in the yellow. But overall, I don't think we will hold this level. Again, we could see a small bounce, but I think we'll be breaking below 21.6k here, and I think we'll be going down for a retest of that 20k region. And that's that green box you see at the bottom of the screen here. In that 20k region, we do have bull market support band. In that 20k region, we do have 200-day SMA. We have various things in that 20k region. And right now, I do want to make it very clear as well. Just because I'm short-term bearish, it does not mean I'm long-term bearish. I am very much long-term bullish. I believe the bottom is in as per the 4-year cycle theory. I believe that even right now, even as someone who is saying we go down a little bit more and see a bit of a rough March, which I've been saying since late February, I do think there are signs already of a reversal to the upside, right? You can see volume, look, for example, in this early part of January, look where my cursor is right now. We had the massive uptrend in January. Volume skyrocketed during that period of time, which suggested that as the price moved upwards, more and more people were buying. There was massive strength in that trend. What we're seeing right now is a correction, and we aren't seeing that same spike in red volume. It means this downwards trend is not as strong as this upwards trend. People aren't ready to give up on Bitcoin yet. They aren't ready to flip bearish yet. We haven't lost the significant levels. I think that we can go all the way down to 20k to 19k, potentially even 18k. As you can see on the weekly chart here, 18k being this yellow uptrending support line that stems all the way back from 2013. I think we could even go all the way down there and still remain macro bullish on Bitcoin. Ultimately, my bottom target for this short little correction we're going to be having is around 20k to 19k, but I'm just saying, it is possible to go lower and still remain healthy on the macro scale. You can also see that what we have here, yes, it's a larger range. Yes, the top of the range is 25.2k, and yes, you could say the bottom of the range is down here at 15k, but you could actually divide it into two ranges. You could say that one range is basically like this, right? And the other range is a lower range down here, okay? And so long as we're in this upper range, we're still in the same range, and hence we're still in the same macro price action. So I think that right now, I do want to make something very clear. I think that, most people are bullish on the market. I've done polls on my cryptocurrency channel asking people whether they're bullish or bearish. And as you can see, as of 1 day ago, I did a poll, 54% of people think the bottom is in. So most people are bullish right now, and I think there is justification for that. I don't think there is significant justification to be macro bearish. I think, at worst, you can be macro indecisive. And the reason why you could take that position is because you could look at the weekly chart, and you could look at the fact that every single bull market ever we've seen, which is, 3 of them now. Let me just go ahead and fix this up real quick. Every single bull market we've seen, and I'll go ahead and clear this chart so you can see it quite clearly, we generally form a bull market support zone, okay? So for example, in this bull market over here, we had a bull market support band around 300, 400. 2018, we had one at around, 6,000, okay? And 2020 and 2021, we had one at 28K roughly, okay? Every single bull market, we have that bull market support zone, and it acts as a bear market resistance zone. And when we get above it, we skyrocket, okay? So you could say that we're still in, we're still in a bear market, technically, until we break that 28K, 29K zone. But you can't really say we're macro bearish after all the stuff we've done in the last couple of months, I don't think, especially considering 4-year cycle theory. So yeah, I guess the only acceptable point of view, in my opinion, is kind of neutral or macro bullish. Now, I will say, and I've said this over and over and over again, and you guys, probably remember me saying this, I don't think there is significant justification to claim that the bottom is 100% confirmed to be in. I don't think that justification is going to exist until we break 28 to 29K. It's my personal opinion, the bottom is in, but it's not fully justified. It's not fully confirmed with charts. So we can move on to the next topic of the video now. And actually, just before we do that, we're linking back into the same topic here with Wyckoff. It is expected to be seeing a correction here, okay? It's not unhealthy, it's completely healthy. Wyckoff does predict a correction here, and people have said to me over and over and over again, Wolf, if you believe in Wyckoff, which I do, I think Wyckoff is very important for Bitcoin. Wyckoff has played out multiple times in the past. Wyckoff played out, we had Wyckoff distribution over here, Wyckoff distribution over here, Wyckoff accumulation over here. It's played out multiple times for Bitcoin. Wyckoff is definitely a real thing that matters on the Bitcoin chart. But it is worth noting that just because we're seeing a Wyckoff accumulation, it doesn't mean we need to go down to new lows. It doesn't mean we need to crash down and go to a new price point at 13.8K or lower, right? What we could be seeing is Wyckoff accumulation version 2 or something similar to that on the right-hand side of the screen here, in which we correct downwards, as expected, to that 20 to 19K region, and then come back upwards and break to the upside. That is what I think we're seeing, and I think there's reasonable justification for that, given the 4-year cycle theory and given everything that surrounds that, rather than just saying, oh, we're going to new lows because of Wyckoff accumulation, and relating that back to the stock market and everything like that. I actually don't think there's significant evidence to suggest that Bitcoin will be dragged down by those traditional markets. I've discussed that many times in the past, and we'll get into that now in the next part of the video. What I've been looking at recently, and this kind of leads into what I'm going to show you. I'm going to show you a video in a second here. What I've been looking at recently is Bitcoin in relation to interest rates, okay? And what we've seen is Bitcoin historically be pretty correlated to interest rates, not really that much. I mean, it started in 2018, and what you can see, if you look at the chart on the screen here, orange represents interest rates, okay? You can see that on the day, on the week, whatever it would have been, that interest rates topped out in 2018, Bitcoin found a bottom. Then, on the week that interest rates started going down again, Bitcoin found a local top, and then on the week that interest rates bottomed out, Bitcoin bottomed out. Okay, so there is a clear pattern there. That's more than a coincidence. But what I will say as well is this, okay? That trend existed in 2018 to 2020. As of right now, if we look at what's happened recently, when interest rates started rising, okay, in 2022, we saw no effect on Bitcoin. All right, so maybe that trend has died out. After all, it's been 2 years, 3 years actually. It's been 3 years since we've seen any real significance in that interest rates to Bitcoin chart. And the last time we saw it just a year ago, it didn't do anything to the Bitcoin price. So I will kind of pitch you that before I show you this video. But this video is relevant nevertheless for traditional markets, and hence it is relevant for Bitcoin, because Bitcoin, although I don't think is going to new lows, I do think that definitely a recession would definitely halter the growth of Bitcoin. Of course, I mean, you'd be stupid to think it wouldn't. I just don't think it's going to drag to new lows. But I'll show you a video now and you can see what you think.
The Fed has raised interest rates 8 times over the last year in what has been the most extreme rate hike cycle in 40 years. The Fed's goal is to slow inflation, and your tool, raising interest rates, is designed to slow the economy and throw people out of work. So far, you haven't tipped the economy into recession, but you haven't brought inflation entirely under control either. And maybe the reason for that is that other things are also keeping prices high, things you can't fix with high interest rates, things like price gouging and supply chain kinks and a war in Ukraine.
So you guys get the point of the video. The video is essentially discussing, we've got Elizabeth Warren here kind of debating Jerome Powell. And as you move through the video, you can see them having a bit of an exchange here. Elizabeth Warren basically makes the points that essentially if they continue this rate, I think at the end of the year, unemployment would be up by 1% and that the economy would be likely to tip into a recession. And that given the drastic quantity of rate hikes we've seen, which is 8 of them in such a short period of time, out of the 12 times we've seen similar things like this, I think this is what she says, we've never seen the economy not go into a recession. So the whole point she's making is that, you know, she's trying to kind of putting Jerome under pressure here and saying basically, well, you're going to drive the economy into a recession. And, you know, my whole point of view on this is that we have to raise rates because what else can we do? We can't let inflation eat away at everyone. You know, what's the alternative? Just have record high inflation? You know, of course we have to raise rates. But the whole argument she's making is kind of just kind of giving a counterpoint, kind of debating Jerome, debating, you know, Chairman Powell about what we're seeing here with the rate hikes. And what's interesting, the reason why I'm showing this video, I wouldn't show you it otherwise. I don't really care too much about macroeconomy. Obviously, I care about it because I have to, because it kind of decides where the market goes to a certain extent. But it's not really an interest of mine. The reason why I'm showing you this, I wouldn't be showing if it didn't have an effect. The effect it's had is that Jerome Powell in this debate has kind of doubled down, right? He's kind of doubled down on how harsh the Fed is going to be, and he's kind of given some new projections. Previously, he says at one point in the video, and I'll actually find the video now to show you.
See the terminal Fed funds rate landing in this cycle.
So we last wrote down our assessments, individual assessments of that in December, and I think the median range was basically people were clustered between 5 and 5.5. We're going to write down those again as part of them. We do it 4 times a year. We'll do it around the March meeting, which is on the 21st and 22nd of March. And as I indicated in my testimony, I think the data we've seen so far, and we still have other data to see, we still have significant data to see before the meeting, suggests that the ultimate rate that we write down may well be higher than what we wrote down in December.
So you heard it here first. He said it could be higher than what they wrote down in December. They said 5 to 5.5% would be determined, the max rate, the highest they go. And he said it could actually be higher than that, indicating it's going to be, the situation's going to get a little bit worse than expected, and indicating they're going to have to take more drastic measures. And so this, in the last 24 to 48 hours, has actually raised the probability of a 50 basis point hike from 30% to 76%. So basically the situation from a market's perspective has worsened quite significantly based on, well, partially based on at least what he said in that debate there. Also, data is released and all that. Obviously, obviously claims don't really raise probability of a 50 basis point hike from 30% to 76%. That's definitely part of it though, because obviously the market is very speculative and based on what people say, things change. So there is a higher chance of a more aggressive approach to interest rates that we weren't expecting. We weren't expecting to see that rates go that high. If we scroll through the months and just give me a second while I take a look here, we can see that ultimately 52, 5, 50, yeah, we've kind of seen an extra 25 basis points added to the max rate. So now we're looking at, according to the market's expectations, we're looking at the max rate be around 5.75. So 5.75% interest rates would be the max. And if we looked 3 days ago, it would have been 5.50. So obviously that's added a little bearishness to the markets. And we have seen corrections across the board because of that. You know, obviously it's Bitcoin correction, but also corrections in the S&P 500 have been, they've been going down. I think around that time that video was released, around the time that meeting was held, we had this massive red candle on the 4-hourly chart that brought down the S&P 500, probably almost a full 1.5%. That's a pretty, significant steep downwards there. But ultimately, I think the S&P 500 is still, in a decent position. Regardless of whether it holds it or not, obviously, it's a bit more complicated than TA when it comes to the S&P 500, but ultimately, we've broken out of a descending wedge formation, we've bounced a little bit, we've seen a resistance support flip. I don't think it's in that bad of a position as of right now. You could argue that it's in a pattern of exhaustion, it probably will go down further, I'd agree with that, right? We're seeing some sort of channel or some sort of wedge there, and eventually we're probably going to break down further as we actually head into an official recession. But ultimately, I'm not one to make predictions in the S&P 500. It's not really my forte. I don't really care too much, to be honest with you. I've made my opinion very clear about Bitcoin and the S&P. Bitcoin and the S&P, they do move together. They move together at about a 70% rate, at about a 70% correlation. So it's 0.7% correlation. Which means that, 70% of the time, Bitcoin's moving the same way the S&P is, if you're going to generalize it like that. However, what we have also seen is the fact that since August, all right, that correlation has been decreasing significantly week by week. Okay, so the correlation is decreasing as Bitcoin exits its bear cycle and as Bitcoin forms some sort of trend reversal. It hasn't seen it yet. And I want to make something very clear here. I want to really clear this up. I do not think, again, I said this at the start of the video, I do not think a bull market or anything like that is confirmed by any means for Bitcoin. Bitcoin is still in a bear market. Bitcoin's still in a bear market. It is in the same range it has been in since June. It's still in a bear market. We are in bear market territory. It is just my personal subjective opinion that the bottom is in within this bear market. Okay, now I don't think getting above 25.2k puts us in bull market territory. Not at all. I think we see a bull market after the halving. Okay, so as of right now, it is speculation. You have to understand that. It is not fact that the bottom is in. It is speculation. And so you have to adjust your risk accordingly. I am by no means saying that regardless of what happens to Bitcoin, I'm going to say the bottom is in. Not at all. I've said multiple times, even in this video, in every single video I've made in the past week, if Bitcoin drops below 19k, Bitcoin drops below 18k, I'm flipping my opinion. I'm not going to stand by my opinion with like a huge amount of pride for no reason. I will stand by my opinion so long as it's logically supported. As of right now, it certainly is, and as of right now, I do believe the bottom is in. That's all I want to discuss, guys. I thought it was pretty interesting how the probability for a 50 basis point hike went up so significantly in the last 24 hours. It's pretty major stuff. And also, I hope you guys enjoyed the short-term analysis there because Bitcoin is currently on support, and I don't think you should be shorting while it's on support. But as of right now, I don't see that support holding. Potentially see some consolidation for a bit, maybe even one more bounce. Maybe we come up and form the right shoulder to a head and shoulders pattern, then come down further. Who knows? We'll have to wait and see, but I don't see that support holding. I don't see 25k breaking without at least a little bit more correction or consolidation. So thank you for watching, guys. Check out the BitGet Exchange. Check out the Crypto Academy. I'll bring up that stuff now. So BitGet Exchange is the most important one. This is the best way you can help the channel. It's the best way you can help yourself as a trader. You're getting 5 times lower fees than Binance. You're getting a reward center. You're getting a copy trading platform. You're getting 15% trading fee discount for life by signing up using my referral link, and of course an exclusive reward center that I said before there. Non-KYC, sign up from anywhere in the world, including the United States of America. All you'd have to do to sign up from the US is click other as country as origin and use a VPN. So go ahead and sign up using my referral link in the pinned comment and description below. And then we've got the Crypto Academy courses. If you want to learn how to trade, you want to learn how to master TA, this is the way you can do it. Check out the website. This course is developed by myself and Megawell Crypto. All the information's on the website. You can read up all about it if you're interested. Go ahead and do that. And then finally, if you're interested in the VIP group, you're interested in becoming a VIP member with the Wolves of Crypto YouTube channel and the Wolves of Crypto Telegram group, where we trade altcoins sub-daily. We've been doing very profitable trades. Regardless if the market goes down or up, we still make trades in there. They're very profitable. You can check out the results for Q4. You can do that using the link in the description and check out that group. 100 USD for 3 months, less than $1 a day. Very good value there. So thank you guys for watching the video. I hope you enjoyed, and I will catch you in the next one. Cheers.